Hi, so I'm Paul Carroll. I'm the editor-in-chief of Insurance Thought Leadership, which is an online publishing platform that I encourage you to all check out if you're not already familiar with it. It's an affiliate of the Institute, so a sister organization of the IIS and of the III and a whole bunch of other things. I hope this is going to be a great discussion. I am as psyched about the energy transformation as I am about anything I have been involved with in a very long time, and I've been involved with a few things. Delighted to be joined by my three distinguished friends here. Tom Kane, who is a senior vice president and the head of underwriting at IIS Services, which is a big mutual company involved in energy insurance in a big way. Michelle Leonard of the III, chief economist there, who also has a prior life he will maybe confess to us a little bit about, having done risk analysis for some large brokerage firms. And then Salim Samaha, who is a partner at Global Infrastructure Partners, which is BlackRock. So he will bring the investing perspective, among other things, to the conversation. A lot of people start at the beginning. I'd like to start at the end. So I'd like to start by asking these folks what they would like you to take away from the session. Just a sentence or two, and then we'll sort of fill in and circle back. I will start by saying that I think the energy transition is the biggest economic opportunity we'll see in the next 25 years. If you and your company are not involved in it, you should be from an investment standpoint, and obviously given the expertise in the room from a risk management and insurance standpoint. So Salim, how about if you tell us how you see that?
Yeah, so I remember during COVID, I sat there, the world is turned upside down, and then everybody suddenly had a view on energy, and the view was the energy transition is happening, it's happening yesterday, and oil and gas are dead for a long time. And I was flabbergasted, and I also felt that it was very hard to have a different point of view because you were viewed as not very intelligent if you were an energy realist. It's really incredible what a difference a few years make, and we're moving closer to an era of energy pragmatism. I think a lot of people don't recognize that energy is really at the center of everything they do. ChatGPT needs energy, your clothes need energy, your food needs energy. And I think maybe we've gone a bit too far the other way, particularly with everything we're seeing in the world right now. It's pretty clear that there is an energy transition. It is happening. Clean energy is a bigger portion of the energy sector overall, year over year. This is not going to stop. If you're going to invest, you want to future-proof your business. So there are a lot of drivers aside from government policy that are driving it. And I do agree, it is going to be the biggest infrastructure opportunity along with AI that we're going to see for the next 30 years.
Tom, how about you?
Well, I'm very, very pleased that Salim went first because I was going to start with that controversial statement as well. I do feel like, looking back a couple of years ago, we saw a lot of large European insurers particularly come out and make these pronouncements of exiting fossil fuels and really kind of focusing in on carbon neutral technologies, which I think is ultimately, I think everybody would agree we want to get there. I think it's just that pragmatism has really kind of come into play in recent years, really just with what Salim was kind of indicating there with the advent of AI, with data centers, and just, pretty much the electrification of everything. I think there's really a kind of this innovation to just look at all sort of forms of power, but also looking at sort of traditional forms of power, but how we can innovate those forms of power to make those greener as well. I think there has been that shift, and I think you've recently seen not an about turn with some of those carriers, but certainly I've seen on a direct side a lot of those markets coming back into insuring coal technology, for example, when they had made these pronouncements they were getting out. And I think that's ultimately the realistic approach there. I think insurance should be an enabler to take risks, an enabler for people to take that financial risk and innovate and explore. I don't think it should be there to kind of coerce people into these forms of technology, which I think it was trying to do at some point.
I found it interesting how nuclear is coming back. I mean, 3 Mile Island maybe started up again just because of, as Salim said, the AI component. Basically, Amazon wants to open that back up and consume all the power from this nuclear plant. Michelle, how about you?
I think it's interesting what you've both said about the juxtaposition or the opposition between alternative sustainable, as our friends at BlackRock referred to it, and traditional energy. I've never really had that in my career in terms of experience. When I was in the brokerage world, working with carriers and around the world and Lloyd's and so forth, we did a lot of traditional energy. And we did a lot of traditional energy in exploration around the world, in Ghana, off the coast of, in the Eastern Med, and other places. And at each step, we felt that there were a great deal of collaboration, especially in those domiciles around the world, which may have had less attractive risk profiles or more challenging. And that's where, to a great degree, insurance came in. We worked closely with our parent when I was at one of the carriers, who was Blackstone and then KKR, on different projects where we would bring in credit product, we would bring in political risk products, but also the willingness, especially on the Lloyd's and the Bermuda markets, to understand the business and be willing to take a leap. And the leap that those underwriters had learned in these domiciles more challenging around the world translated very well to alternative energy. The fact that if you're building a power plant across from Manila, you have issues about stress testing your future cash flow, your taker risk, and so forth. And we were able to help with that because we had developed it. So that element there of insurance, working with the lenders, really at the margins, changing a bit the risk-return equation, but very much being able to bring that expertise and work together to move these projects. Carbon capture plant off the coast of Chile. Challenging, but if you have that ability that underwriters do in addition to the credit analysis, then you can get a long way on that.
So I realized I forgot one bit of bookkeeping. Through the app, if you want to ask a question, you can pose a question. They will pop up on the screen here, and I can't guarantee how much time we'll have, but to the extent that we can answer questions, we will. But the way to do that is through the app. So to get a little more specific about the opportunities, I mean, Salim, you have a great deal of money to invest. Where are you seeing the opportunities? I know, for instance, you said you have a data center fund that you're starting because of the demand there. But what are some of the opportunities you see?
Yeah, so I think when you look at higher interest rates, government deficits, the state of our infrastructure, which is very poor, we're seeing opportunity all over the place. And I think with energy transition and everything going around with AI, the opportunity is quite big. We continue to see natural gas infrastructure as something that's going to be around for a long time. There's still a tremendous amount of coal-fired generation, not only in the U.S., but in Asia in particular, and a very poor renewable resource in those areas. So natural gas is going to be continue to be very big and will continue to grow. We think renewables, it's a bigger, more mature business today. You have to have more capability to generate the right returns. But there's still $2.5 trillion a year of investment that's required every year in renewables, and more importantly, figuring out how to manage the intermittency of those renewables. We've been a big player in battery storage. I think pumped storage is another area that's very interesting. Nuclear, longer term, I think it's still early for some of the SMRs in terms of the risks in the supply chains, but it's hard to envision a future of clean energy without a lot more nuclear. And then we are seeing a lot of projects around biofuels. How do you decarbonize aviation? How do you decarbonize other transportation fuels, leveraging existing infrastructure? Because that's a lot cheaper, it's a lot easier to permit. And there's a lot more support. It's not just about the clean energy, it's also about farming. That's why these policies supporting biofuels have been around in the US for a couple of decades, is because they do support farmers to a degree, and that's a very important constituency. And then one thing that's really picking up is these decarbonization partnerships in heavy to abate sectors. So think about mining, steel, cement, et cetera. We're going to need a lot more copper for electrification. Everything we're talking about. How do you build these new mines? It takes a long time. It takes, in many cases, $10 billion. And the companies that are in those markets, they have to maintain low leverage. Their investors want them to pay a dividend, and they want them to repurchase shares. And they can't do that and invest tens of billions of dollars at the same time. So there's a really meaningful opportunity for the private market to step in and help with accelerate that transition.
So I was part of a project back in 2010 at the Department of Energy that handed out $36.5 billion of money from the Stimulus Act, designed to basically get money into the economy and generate jobs, but also to invest wisely. And solar has done much better than we expected it would back in 2010. Wind has not. Am I right, Salim, from your standpoint, the investment standpoint, that wind is a little iffier these days than maybe we thought it would be a few years ago?
I think a lot of people overestimated the amount of time the wind would blow. I think some of that was optimism bias. Some of it, you could say, maybe climate change, and just it's hard to predict the wind. However, wind, and it's also harder to permit wind, so it's harder to build as much of it. But the shape of the wind resource, where it blows when the sun is not shining, is increasingly valuable. And so if you can build those resources, we're quite bullish on that.
So basically we screwed up, but maybe there's still hope.
I think there's definitely hope.
Okay. So Tom, how about from your standpoint, where are you seeing opportunities?
I think, certainly in terms of our member companies, so the mutual model, ultimately the Aegis mutual model, where our members represent virtually the entire energy infrastructure of North America. So we really have a front row view of that the changes and the challenges and the opportunities that come with the energy transition. And ultimately, kind of what we've seen over particularly the last sort of 5 or 6 years has been just the change in that dynamic in the portfolios, the makeup of that power generation. It is still a huge part of that is gas-fired turbines, but we are seeing innovation there. We have seen kind of just more and more, obviously, solar and wind, particularly more and more on the independent power producers, but also on the utility side as well. And the opportunities for us really are to just get a better, deeper understanding of those risks. I think that's really important for any insurer really to offtake that risk on a sustainable basis, is to get a fundamental understanding of that risk. And in order to do that, we've really heavily invested in better analytics. I mean, one of the key things we did a number of years ago was invest in a proprietary severe convective storm model, which really focuses or gives us the ability to tailor the vulnerability curves for the occupancies. So as you can imagine, with the change in the portfolios, we're really seeing a marked change in the risk profile. So fossil fuel generation is not prone to the weather that renewables would be, as you could expect. So that's given us a better understanding of that risk. And it's also given us a resource for our members to advise them where to build projects as well. So it's kind of symbiotic. We're kind of improving their risk profile, which is ultimately improving our sort of offtake and risk. And I think that's ultimately the opportunity for insurance, right? It's going to continue to be that enabler for those members, for those investors, those owners to take risk. And we have that opportunity to provide those products tailored to that.
Michelle?
On which one of the two? It's interesting because you refer in your first question about, quote, on one hand, those who embraced alternative, sustainable, and so forth, and those who are traditional. And I mentioned that my experience has been that they're more together, but it's very much the case right now where originally one can think, or the first reaction may be that, oh, this is a blue state, something. And when we actually look domestically, I mentioned internationally, but when we look domestically, Texas, Tennessee, the Dakotas and so forth are places where a lot of investment is taking place. And ironically, one of the reasons, and you were referring to this, is that those states that tend to have higher regulations, who also tend to be more on the left side, aren't very happy with some of this construction, especially windmills and so forth. So we're seeing in states where investors will not traditionally think about that. And I think that's wonderful, because it is very much showing that it is a way to advance everyone across the country in that way. And that's probably where we're heading. And insurance, again, can work greatly in that regard. And you were mentioning, and you went there, and I just want to emphasize, we have a lot of data in the insurance world. What you said being an example of that, but even if we're looking at property casualty, at surety, at construction risks, and so forth, we can be there as a partner to provide that in a way that's constructive for the industry.
So to me, the big question in front of us is, how does insurance get involved? Because it seems to me there are two main ways. One, insurance companies have a lot of money to invest. They also have a lot of expertise in terms of the risk assessment, the sort of thing you can do to figure out where the hail is going to hit the solar panels and so forth, so that you can protect against that sort of damage. But there needs to be some coming together. I spent a long time at the Wall Street Journal writing about technology, and it was all very glitzy. But then you realize that none of the innovation happens unless there's risk management and insurance behind it. You know, Google has all the money in the world, and they can go ahead and do Waymo and do the driverless car. But even there, they're quantifying the risk and figuring out ways to defray it. And any company that doesn't have all the money in the world and wants to try to do something like Waymo or whatever needs to have an insurance component. So how do we make this innovation work by supporting it with insurance? And Salim, I'll pose that small question to you to start us.
I think there's a need for innovation in the sector. And what I would observe is there's capital for what I would call more venture capital or growth equity, small checks, earlier stage. And then you have mature infrastructure capital. But there's very little in the middle, where you're taking a proven technology at a commercial scale, but then you're trying to grow that. So that's one vacuum, and I think having the insurers really understand those technologies and work with the right pools of capital is helpful. Then there's a stage right before that where something's proven, but it's not proven at scale, or you don't have the full supply chain. So if there's an error in construction, there's a lot of finger pointing, and the cost can get very high because the supply chain is tight. I think that's where some combo of government and insurance can potentially play a role to get those industries going, because once they get going, there will not be a shortage of market signals for the capital to go there.
Yeah, in my Silicon Valley days, there was a book that was sort of the Bible called Crossing the Chasm. And it sort of, you could do the venture capital and you could do this little thing, but then the mass market is over here, and there's a chasm in the middle, and you have to figure out some way to cross that chasm. Tom, how does it look from the Aegis standpoint?
Interesting. I think, I've obviously, risk of repeating myself, I do think that, insurance being the grease that really grinds the wheels of the industry. And I think that enabler of risk, I think that's one element, and insurers do need to ultimately adapt their appetite, their risk appetite. I think it's somewhat challenging, and I think I think energy transition is a really interesting kind of topic here, because what you've got is two very big variables in the risk equation fundamentally changing. You have the occupancy changing. As I said, we're seeing a change in occupancy, a lot of traditional forms of energy being utilized in different ways. Coal plants now being, historically have been baseload power providers, now being used as peaker plants. What inherent risks are going to come out of that? We're seeing change in terms of profile risk with moving to renewables that I've already talked about. So you've got that variable changing, but you also have the change from the exposure with climate change. I think we just saw with the two most recent hurricanes, we're seeing events that we haven't historically seen in the past. With Helene, for example, how rapidly that hurricane intensified and just how many states that covered and impacted, in areas which historically have not seen that kind of those levels of flooding. So you're seeing that those two variables change, and I think that is a real challenge for insurance, because ultimately you're dealing with an unknown quantum of risk. So again, I think just really, I think what we have to do as an industry in terms of insurance industry is collaborate, as Michelle was referring to. The way we're doing that is, we see obviously our members' risk profile on an aggregated basis. So we can see all those loss trends, and we have that loss data on a very large aggregated basis. And it's sharing that data with our member companies. It's also utilizing that data and building that into our own modeling to come out with sustainable pricing and giving estimates on losses. But I think it's that collaboration and sharing of that information as well.
Michelle?
I'm going to answer in two different parts. First, on the investment side, on the assets under management. A lot of folks don't realize that we're actually, you can correct me if I'm wrong, but as of recently, we are the largest source with pension funds of capital. It's a significant amount, assets under management, some of which is managed by you guys at BlackRock. And what folks don't realize is that we have to be very conservative in those investments. All of it is regulated at the state level. There are requirements to invest locally, to keep it in states and so forth. It used to be a lot of it in municipal bonds, less so now because there's been diversification in products and so forth. Real estate used to be much more important, less so now as well. So when we're looking at what can insurance do from that perspective, from the assets under management, it's a bit more limited if we're talking about emerging technologies. And that's where I think there's a great juxtaposition, because we can look, and folks sometimes forget about that or don't think of it that way, but where we place insurance on that part of the business, we can come in at almost all of the stage of the problems that you've highlighted there, in terms of protecting against technology issues, using that generically. But I'm just going to kind of walk us through very briefly here, project finance type. Not all of them are, but one of the first places you want to go is to get your off-taker risk managed. Once the technology part and so forth may be already taken care of, but that challenge for greenfields, for new plants and so forth, new projects, before they come online is how do we make sure that lenders and investors are comfortable with that? And that was a big chunk of what I did, and my colleagues did, working with credit underwriters, working with a variety of markets where we could come in, and again, because of that expertise and that willingness to take risks, which insurance has been doing for many centuries, we were able to step in and kind of advance the project. And we would go, and capital can be, pricing-wise, insurance is relatively affordable in that context. So we'd be able to take care of some of that off-taker risk, sometimes also show the quality of the companies behind it, especially for new projects. And once that moves forward, then of course it helps mature the industry, and then the asset management can come in, because there is some flexibility. All of that chunk of money, there is an element of it that goes under private equity and so forth, and all that. So I think there's a sense there of the two different roles that we can play as an industry, again, in facilitating and addressing some of these risks to increase investors' and lenders' comfort.
To try to dive in a little bit, maybe Salim or Tom or Michelle, I'd ask you to tee up potential situation where there can be this sort of collaboration between the innovation and the insurance. I mean, Salim, you mentioned a couple things that I've been tracking for a while. The carbon capture is one that back in 2010 we thought was unrealistically expensive, but has now become more plausible. The sort of cement manufacturing you're talking about is another one that we kicked around some, and that I think has been plausibly experimented with for many years, but I haven't seen anything that, to my mind anyway, constitutes a breakthrough. Steel is another one that you mentioned that I think is huge. So I don't know whether you have a particular one from that list or from some others that you might want to tee up as a way to dive into how insurance can be involved, or Tom, maybe you do as well.
Yeah, maybe let me pick a project we invested in. So we were building an ammonia urea project in Western Australia. They have a low-cost gas resource. They're focused on food security, which is why there was a need for that project urea as a fertilizer. And this is a project that will make money today. It's got offtake, and it's just turning natural gas into urea. But everything was built in a way that's future-proofed. And what do I mean by that is you have the sequestration right there. As the cap and trade system in Australia for carbon gets tighter, there's going to be an incentive to not pay for the carbon credits and to actually develop the sequestration. It becomes a lot easier to finance these things if insurance, doing the right technical work, is willing to cover any potential liability from carbon staying in the ground, for example. So I think there are a lot of risks that I can be well understood, well quantified, where you can get a lot more efficient debt and equity financing if you're participating with insurance.
And how would that look from an insurer standpoint?
I think I can't speak to that technology, but I do think I touched on the collaboration that we've seen. But yeah, I think the just ultimately insurers, I think, working more and more with the developers of these technologies is only going to be more benefit. It's only going to benefit everybody in the end. But I think the examples where we've seen of that is we have a focused in on the industry that we are, we have a very kind of narrow view of that industry, but it ultimately enables us to have a very deep technical knowledge. And an example of that is the mutual side is we were only 300 employees in terms of headcount, but 60 of those or 65 of those are engineers. So they're So roughly over 20%. And they are, they've come from a lot of our member companies. So they are very much, involved in the industry, keep up to date with industry trends and everything like that. But ultimately, we have those engineers going out to our insured policyholders' facilities and really on the ground when they're trying innovative new techniques. So what we're seeing more and more frequently now is the use of hydrogen in gas-fired turbines, right? It's very, very low amounts at this stage, but it's something they're exploring. Our loss control engineers are very much on the ground with them, exploring what are the potential risks, what are the exposures, what are their concerns, and ultimately seeing that, as I said, across all of these different member companies that are focused in on this, and they have that aggregated view and they can share that aggregated data. And I think sharing those insights and that collaboration is a key part of what we're doing and the service that we provide.
So from my standpoint, that risk assessment is huge. I'm probably about to commit 5 years of my life to doing a book on a particular nuclear power plant because I actually go all the way back on nuclear. My dad was the chief spokesman at Westinghouse in the 1970s and 1980s when it was the biggest maker of nuclear plants in the world. So I sort of grew up with it. But Bill Gates is behind a plant that's being built in a little town in Wyoming that should be an interesting story, I hope, if I tell it right. all the way around. And obviously, this plant has more of a prospect than a lot do, because Gates has said he personally will write billion-dollar checks as long as he needs to make this happen, as long as he believes the technology will work. But holy smokes, there are a lot of things that can go wrong there. I mean, the design hasn't been approved yet. There are a whole bunch of competing designs. He does have advantages that others don't, because he's building the plant in a spot where a coal plant is being retired. It's going to switch to natural gas for at least a while. But anyway, there are so many things that can go wrong, and I wish I knew more about the risks, and then I would know whether it's really worth committing 5 years of my life to following this project through to a success or a failure. But anyway, I'm sort of curious from any one of you how you do this. Obviously, Tom, you're talking about sort of drilling in and having the expertise and so forth. But just in general, what can you do? What are you doing to try to assess these risks?
I'll take that one. First, I just want to point out, and I don't know if that's exactly what you said, that looking for underwriters and insurance company that would be willing to take the risk, for example, of liability with whether the carbon will stay in the ground. That's quite, I just love the way you said that. If there's anyone in the room who's interested in taking that room, I'll be quite impressed. And they would be very much indicative, but I think it is so, of how underwriters and in the insurance world does take on those risks. And I think you just said it very well, both of you. That is because of the investment as an industry that not only carriers put in expertise and the engineers and the specialists you're referring to, but also the brokers. And what I think is important here, and we're talking about how to facilitate, especially at the VC stage and so forth, a lot of these markets, to have access to them, one, they're commercial markets and so forth, and one needs to have those relationships established. And quite often when the projects start, they're fairly small, especially on the more innovative side. And brokers will be there to help. And brokers also have a lot of, and if I sound like an advertiser for the industry, it's because I was with a few of them. But my job was specifically that. I'm an economist and a data guy by training, but somehow folks think that means I can solve anything. So anything that would come that'd be sometimes interesting, sometimes not interesting, but that someone wanted to be able to move it forward and to have a placement with it would end up on my desk. And that of a few other folks within the companies and the brokerage firms. But then we would look at it and we would look at how to understand, how to translate. And a lot of them have the capacities that you're discussing. I mean, that's unique for you to have that. Most carriers actually, quite often, many carriers, especially in the specialty lines, will look to the brokers for that reason. And just to talk about like amounts, if you have a project that, or if you're still at the development stage and you're still in the hundreds of thousands of dollars and trying to put together and reach out to financing and try to look at the risk there, and at that very initial, we're not talking about the valley of death and so forth later on in the process, but at very initial phase, we would often have these meetings where we would bring together, facilitate investors and bring them and introduce them to some of the carriers. And again, it would help the investors to actually, in many occasions, be in front of audiences of potential investors and lenders that would then become partners along with that, because we would bring our willingness and we would in some way be sorting out and all of that. So, that element there of the brokers and all the resources that they have in their specialty lines especially is very important to facilitate. And that's one part I wanted to mention.
Good point.
So we have a question that delves into this a little bit more about data sets that are required to support the energy transition and the insurance that's required to back it. I mean, I was sort of thinking in terms of the experts inside Aegis, inside BlackRock, whatever. But are there data sets that can support this sort of analysis?
Yeah, I think so. I think fundamentally, I touched on it before, the changing variables, right? And I think with climate change, I think AI climate models are a must. I mean, I think, again, we cannot look back at historical data when it comes to climate change with regards to some of these events now, with all these events. And I think we're just seeing, more and more energy in the atmosphere and just a wetter atmosphere, and we're seeing just that drive, just more catastrophic weather events. So I think that's one element. I think also, I think just lost data. I think we have, being a mutual, it's been that kind of sleepy old mutual with not necessarily the biggest innovators, but I think what we've really been exploring is we're really sitting on a huge amount of data, which is historical, but also we have been writing renewables for some time now, so we have that. I think what has been challenging, and I think Dickie, who was on the stage earlier, was talking about that data cleansing. I feel like with AI, particularly looking at improvements in the workflow process, but we are sitting on this data. It's just amazing to me how different internal departments have coded that data, and then trying to link that all up. I think AI, and we're seeing this anyway internally, AI is playing a real enabling role in ultimately joining those dots. So I think that data, ultimately that lost data, I think also that the AI data coming from these weather models, I think that's ultimately going to help support that transition as well.
So if Patrick Swayze were still around, I think we ought to do a movie called Dirty Data. I just think this whole data cleansing issue is about as big as anything can be. There just is so much that has to be done, and there's so much that can't be done in the way of AI and some other things until that happens. Michelle or Salim, would you have anything to say about data sets?
I mean, I think a lot of this is new. So I'll give you an example. When we invested in one of the leading battery storage developers in the U.S., and the thesis was there were a lot of companies saying, I've got these great AI models that are going to predict exactly how you should dispatch the battery. And we tested them out, and there's no way they can do it. Everything going forward is very different than the way it was backwards. And so we hired a lot of people from NASA, and we built our own model, but it's insufficient on its own. It goes back to, in my mind, to these chess games where you have a grandmaster and artificial intelligence together that do a much better job than beating another AI or another player. And I think it's similar with these technologies, whether it's predictive maintenance, whether it's commercial optimization for pricing of the product that you're providing, or trying to predict the weather. I think you're going to need some human overlay, at least for some period of time.
I'm going to be very short so that we can go back to the next
Sure.
question. But if I had AI when I went through the old Lloyd's files on political risk, it would have made life so much easier to quantify the impact of shifts in policy and tariffs and so forth. But they've both said it so well, and don't need to add anything else.
So I found it fascinating after Deep Blue beat Garry Kasparov that they did get into these sorts of competitions. They talked about them as centaurs at that point, a human and a machine against a human and a machine. I tried to popularize that term centaur, and people didn't seem to like it. So cyborg seems to be the term that has been adopted these days. But there are a lot of those sort of things going on. And I think actually that cyborg model is sort of the way to think about AI. But I digress into all kinds of other weird little things that I think about. If we were to blue sky this in terms of what the energy transition will look like and what insurance and investors can be doing together, and look out 3 years, 5 years, 10 years, however far you want, what would that look like? And we'll start this way and go down. Tom, what would you say?
I think it was interesting. I'm very interested in what you were talking about with the nuclear, the small modular reactors, and I think what is the phrase? Necessity is the mother of invention, and I think the necessity is ultimately we need all forms of power. Obviously, we want to move towards, as I said, more carbon neutral. So hence looking at restarting of 3 Mile Island, looking at these SMRs. I think kind of blue sky, I don't think SMRs are going to be there in 3 to 5 years. I think we're going to see a lot of variations of that technology, and that'll probably develop over the 10-year sort of cycle, and before we kind of land on the premier sort of technology there. But I think, you know, that could just be a good symbol for just the changing technologies we're going to see. I think we're going to just see more insurance capacity attracted to the space as brokers, as carriers, as cedants in our example, in our case, get a better understanding of that risk and demonstrate how they're getting a better understanding. I'll give a perfect example. So I think we have, we're reliant on, as most carriers are, on our reinsurance partnerships. And those reinsurers really trust us to get a good understanding of that risk so we can insure it on a sustainable basis for the long term. So I think, you know, as long as those cedants, as long as those stakeholders on the insurance side are still investing in getting a better understanding of that risk, getting the data, and getting the you know, more insurance capacity comfortable with it, we're just going to see more and more of that capacity flow in and support the industry.
Non-partisan, transformational, transitional instead of overnight, multi-technology. I think what Salim said earlier about wind and solar. And as the industry mature, we'll have, I think, a great opportunity on the asset side to invest as an industry. And I think we'll have a unique role there because one side of our companies, they are different, but on one side will have that experience and therefore the comfort of having their own institution having been there. And then thanks to the insurance placement side, and then the asset management will be able, our assets will be able to go in at that point a more conservative way as we're required by regulators. But I can't stress enough this element of bipartisan, this element of global, and again, I encourage you all to go and look at the map of the US. Where is it happening? It's happening in all over the country.
I think it's a complicated question, but I think blue sky, right? If you're in the biofuels business, there's a risk around your feedstocks that could be related to crops, right, and weather. Is there a solution to help with that? Is there insurance around the availability risk of newer technologies? There's going to be more volatility in the grid given the increased electrification. Is there a way to help take some of that, those really outsized outcomes off the table, right, on a macro basis? Because if you can build coverage across a broader geographical scope, you might be able to mute it, and you need the scale to do that. I think all of these, it's going to be very esoteric to these different technologies that Michel's talking about, but that will help drive affordability for and better capital efficiency across these solutions, which is really integral to accelerating the transition because customer affordability is a big issue.
Yes, the first one. Yes, the second one already.
Yeah.
3, good luck.
Yeah.
But it will be there.
Sure.
So I should note that what you were seeing was a map that Michel had done for us, showing just how ubiquitous the spread. There it is again. At least I can see it. I guess you can see it now. And I don't know if you want to talk about that a bit. I was always struck that despite what we think about Texas and its politics, West Texas is just a wind factory, has been. And anyway, Michel, is there anything you want to say to talk us through that map?
I'd rather get us to the next question so we can be there for the audience, but thank you.
So we have another question that feeds into what we were just talking about. I'll rephrase it a little bit, but we're talking about data sets and expertise and how you assess risks and so forth. The question is really how can we come together as a global community so that we don't make anybody give up their secret sauce, but at the same time figure out ways to share some expertise, some data, and so forth, because we're really all in this together in terms of the climate issue and the transformation.
As the Industry Trade Association with regards to research, first, whoever wrote that must be an economist because it's a wonderfully written question, or an actuary because it's quite long. Or a data scientist, yes. There are several initiatives to that effect. In Europe, the reinsurers are very much involved with that. We have an initiative on resilience. There are actually companies in this room that have been working with carriers on getting some of that and so forth. But I think what is key is the claim side. Because the claim side it gives a type of business-driven, of performance risk, of project risk, and so forth, that both lenders and everyone along the supply chain there, the value chain, is willing to look at. And Lloyd's has fantastic data, and that's where AI comes in. The challenge is to actually find a way to standardize that, but there are many initiatives, and I think we have members who've been looking into that as well. So if you're interested in investing in that, I'm sure our parent and ourselves will be very happy about that.
So the answer basically is Michelle's cell phone number is, I'll give it to you in a second. So we're running out of time. How about if we summarize? Maybe we start coming this way. At the beginning, I asked you the thing you wanted to leave people with. So now we've gone through this. Salim, why don't you start us off and say what you'd like people to take away from the session?
I think I approach it from an investment perspective, and in my view, it can't be a normative thing to say the world has to transition. We have to get to net zero. I think there need to be incentives in place. There need to be mandates and carbon pricing in order to drive that investment, because it has to be something where people make a good risk-adjusted return. It needs to be affordable to the consumer. And I think the good news is, even though the pace to get to net zero is slower than most of us would like, it is happening. It requires a lot of capital. And because of that, those economic incentives, you have very smart people working on a lot of innovative solutions that are going to continue to create a virtuous cycle.
International, I think our markets are there and they can help bring expertise from one part of the world to the other.
Yeah, I think it really is. It's going to require all forms of technologies. I think we are going to see more and more of innovation, SMRs, going back into nuclear. I think the insurance industry has a big role to play in that. As I said, I think it's really, a lot of it is about analytics, understanding the risk, understanding the engineering components of that risk, in order to provide that sustainable coverage on the long term. I think and kind of this question, just to touch on it, I think it is. I saw somebody speak who a CEO of a large insurer, and he was referring to the fact that the insurance is probably the only industry where you would prefer to have smart competition than dumb competition. And I think that sharing of that claims data, Michelle was talking about it, I'm all for it, because I think insurance is taking out that volatility, right? That volatility of risk. You don't want volatility in pricing. You don't want markets coming in thinking they should be covering this because of ESG requirements or whatever, get the risk totally wrong, and then you see this just massive change in pricing in terms and conditions. So I think sharing of that claims data, better understanding, and is a key element across the industry. Whether you have institutes to facilitate that, public databases, I don't know, but I think that has to be a key part of what we're doing.
So I'll just return to what I said, which is I think the energy transformation is the biggest economic opportunity of the next 25 years. I'll add AI, as Salim said at the beginning, which I think of as being caught up in that, because AI is such a consumer of energy, and it's now such a driver of all that. And just add that, as I've learned over the decades, nothing innovative can happen without insurance. So I think that this group, writ very large, is key to everything that's going to happen. So thank you, and thank you all for your attention.